whether you want to travel different places, go to beaches, have fun with your family, go to different places, see exotic animals, eat good food, or if you want to pay your bills, all those depends on your choice you're making. As a passive income investor, the best thing is to know what kind of investments you're investing your money in and what differences. If you have too many different investments in front of you, to have the knowledge of knowing that, it's sometimes it can be really challenging. But in this channel, Mr. Money Mind, on my channel, I make sure that you know the differences and also similarity. So if it's your first time, just make sure you subscribe and like my content if you like, and if you have any comment, just make sure you leave the comment below, because on this channel I'm going to give you details on any type of investment you ask a question on. So let's go. Today I'm going to talk about the two Hamilton ETFs, which are one of the best out there. These two ETF, actually, look at that. The one pays 15%, the other one pays 13%. So it's pretty good if you put a big chunk of money, and they're very solid. But even though they're solid, we want to know the difference between that. Let's say, for example, you are an investor who wants to invest only in one. Which one should you pick for optimizing your income and also for protecting your wealth? So the first one is Hamilton Canadian Financial Yield Maximizer. This has been around for a long time, and this one, UMAX, is just a brand new, just came out, or actually it hasn't officially been, you can see here, coming soon. So it hasn't officially been traded, but today we have full details on this ETF. I made a video last week to kind of detail this one, how it's going to look, and I was pretty much bang on my prediction of what it's going to be, because now we have it's officially on the website now with all the details we have, except one thing. I'll tell you what that is, and in the end I'm going to give you which one is the best based on performance, real performance that I've came up. I did on the data we have. So a highlight of this fund, first of all, this is 15% yield monthly distribution. This one also is 13% monthly distribution. Diversified exposure to financial, this is utility, right? Active covered call strategy to enhance monthly income, to reduce volatility. Current covered call is approximately 50% of the portfolio, which is the same as this one. So they're pretty much similar to the highlight, except this one is 15%, this one is 13%. When it comes to who's good fit for, or who is an investor who is suitable to invest their money in these two funds, or one of these, will be a person who is looking for high income, person who is looking to invest in blue chip companies, and person who he wants to maximize their tax efficiency, and reduce volatility for option strategy. So they have the same 4 points, is the same as this one as well. When it comes to fund objective, so HMAX and UMAX, they're both designed to attract monthly income while providing exposure to portfolio of this one is utility service, and this one is the bank and financial services, to reduce volatility and augment dividend income. HMAX will employ an active cover call strategy, and this one is pretty much will deploy an active cover call strategy. UMAX does not use leverage, and HMAX does not use leverage, because we know some of Hamilton ETFs does have that 25% leverage to maximize that yield. So, but these two funds actually do not use that. They just use the income that they receive from the stocks that I'm going to show you, and also they are writing cover call on that, or dynamic cover call, and using those two strategy, they can generate that higher yield without having to use the leverage that other funds uses. So investment objective, we will look at the highlight of the yield. If you look at the comparison between other funds, for example, big six banks average. So let's say you invest on those six banks, you're only gonna get 5%, 5.25. If you invest on those utility company and the stocks that this fund invests, if you just invest in those ones, on average they have 4.34%. So banks usually have a higher yield than the stocks the UMAX invest, which are utility, transportation, and communications. So when you look at the covered call, other covered call ETF that are provided from BMO and other providers that use the same banking and financial covered call or utility you'd have on a bank, on average will be about 7%, and this one will be about same, pretty much 7% or about 8% round up. But with this one you would get 13%. With HMAX you would get over 15%. So what's the difference? If we look at these two funds, or these funds, we look at what makes UMAX different. What makes HMAX different. On that point, they all have the same. Look, many covered call ETF write option on 30 to 50% of portfolio out of the money, right? Many covered call ETF write option on 30 to 50% of portfolio out of the money. UMAX and HMAX both provide high income, with a dynamic cover call strategy, and this one also uses dynamic cover call strategy, and they write option on only 50% of the portfolio at the money. So instead of out of the money, this one write at the money, and this one write option at the money. And if you check my other videos, I explain what the out the money and at the money and out the money means. But both of these UMAX and HMAX both uses only 50% of the portfolio to write those at the money cover call option. This allows HMAX to generate a high option premium while maintaining 50% upside potential. This allows UMAX to generate a high option premium while maintaining 50% upside potential. So they both have similarity on that. When we come to look at the HMAX, ticker symbol is HMAX. The ticker symbol on this one will be UMAX. Price NAV is 1441. So what's the NAV on this one? Because we don't have NAV on this one, and that way you can say, well, we don't know the NAV, but actually I do know the NAV because we know the yield is 13. We know the NAV is 13. I mean, the yield is 13%, and we know the distribution is going to be. I'll tell you here. Actually, let me leave that to the last point. So let's look at. I'm going to this point after this video. I'll tell you what the price on this one is going to be. Because I'm very smart, I think. Just kidding. So we look at the sector allocation. We look at the sector allocation on this one. Sector allocation. Do we know the sector allocation? Yes, this one is banks and insurance. This one will have utility, transportation, and telecom, because we can see BCE, we can see those companies, and we can tell exactly what sector allocation is versus this has only a bank and insurance. So we look at the stocks. This one has 10 stocks. This one has 13 stocks. And the difference between one thing I made a video last week, I said, of course, this is going to be pretty much maybe cap weighted. So the bigger the company takes the bigger portion in the portfolio. I predicted this is going to be kind of the same, but actually that's not what it was or it is going to be. So what they did, they just equal weight all of them. So we look at the BCE, TRS, TRP, Enbridge, Rogers, Fortis, Emera, Pembina, Western Connection, Canadian National Railways, Hydro One, TELUS, Northland Power, Canadian Pacific. All of them are 7.7%, and that will give you about 100% of portfolio. And this one is market cap. So they put the biggest at the top. So we can see Royal Bank has the highest weight, followed by Toronto Dominion Bank, and also BMO and BNX. So going just like that. So that's the difference between these two. You can see the difference here, the cap weight and the equal weighted. So that's one of the major difference. When you look at other fundamental, Hamilton is available. Both of these funds will be available for purchase on Toronto Stock Exchange or TSX. So these are Canadian funds and will be traded on Canadian exchange. Ticker symbol will be HMAX, and this is UMAX. We look at investment style. They both cover call. Right. Look at the monthly distribution. They are both pay monthly. We look at the rebalancing. How they rebalance. They use semi-annual. So semi-annually they will be rebalanced. And we look at management fee 65, this is 65. So they're both pretty much the same on this when it comes to fundamental and everything like that. But we're going to know the difference between these two. We look at the distribution now, and I'm going to tell the price after knowing the distribution. So distribution on this one, this has been paying dividend for about 4 months now, and the last dividend was about 0.180, so 180. You know, they cut from 185, and I made a video on that. You can check the link below, and you can check my other videos I made on that one. So this one here, the dividend ex-dividend date will be on July 7th, July 28th. So that's about more than a month from now. Then the first dividend they're going to pay will be on August 8th, and the monthly distribution or the dividend on monthly will be about 0.175. So let's go back to so we now know the dividends. We know it's 175, and we know the yield is about 13%. At this point here, I'll say I told you that I'm going to come back and tell you the price of this one. So we know those two numbers, and you know anything, if you know basic math, you can calculate. Once you have the two numbers or three numbers, you can find the fourth one, right? You know, X, that's a very simple math. So we know if we take 175, if we take this 175 times 12, we'll get about 2.1. So annually they will be giving per share, it will be $2.10. So if we take $2.10, if we do calculation, we're going to get, if we do here calculation, if we do 2.10 divided by $16, we're gonna get 13.13 times 100. Look at that, 13%. So now, because of that, we know the price on this one will be $16. So the NAV also will be $16. So that's a price on this. UMAX will be 16. This one also, when it came out on the market, it was at 16, and then it came down as the market crashed a little bit. So that's it when it comes to these two funds. So now I'm going to give you the main pointer, which one should invest your money, who is the winner on this. I made a little chart here. Let's start with performance first. We look at the performance. This one, actually, you know, let me look. These are ETF battle scorecard. These are my little chart I made. So scorecard, we're going to score 5 out of 5 points, and we look at first point will be risk and strategy. They're both medium, so they're both draw not. When it comes to fees, they're both 0.65, you know, management fees. So it'll be both draw, so they're equal. When it comes to diversification, this one, HMAX, I've shown you there, invest on bank and insurance only, where UMAX invests in utility, transportation, and telecom. So UMAX is more diversified, and at that point, UMAX wins. When it comes to fourth point, performance, we look at 7-year chart. If you invest in those stocks, this one, HMAX, those stocks on HMAX will give you about 8% annually. This guy, UMAX, will give you about 10%. How did I know that? Of course, be assured that I did my homework. I have this one here. If we look at 2017, look at HMAX. You know, HMAX was performing. Those are just stocks on HMAX, right? So I did the stocks on HMAX, and I did the just stock in UMAX. So 13 stocks versus 10 stocks. If you take those stocks, you just invest in all those stocks, this is what you're gonna get, right? So you invest your $10,000, you'd have a full will be $795, and this is 9.75. And the reason is because those ones are just banks. So in a year, for example, in 2018, bank get crashed more than utilities, right? So utility were very low, went only down 0.65, where bank lost almost 8%. The other year was 2022. Look at the banks. You know, look at this one. It's crashed almost 20%, right? I mean, 8% was crashed down, right, in 2022, where utility only lost about 3, actually went up by 3.75%. So when we look at the 2023, same deal, right? Banks get crashed in 2023, where utility didn't crash as much, almost flat. So because of that, so banks are more volatile, and that's why the utilities actually and transportation, and for example, CNR is it's a very defensive companies. So there are more defensive stocks in this. You can see these stocks are very defensive, right? CNR, and that's because of that. Those stocks didn't crash as much, but all in all, we look at the performance. We know UMAX has won on that battle. When it comes to yield, HMAX, of course, is the winner because it has 15%, if you've seen it, versus UMAX has only 13%. And in that case, HMAX win. So between these two, which one should you invest your money between HMAX and UMAX? For someone who doesn't have as much money and they just want to invest in one, and you want get as much yield at the moment, then HMAX will be good for you to invest your money. But if you have if you just wanna to preserve as much money and for more growth and less volatility, then I would go with the UMAX because it has more potential to grow bigger and less volatile. But when you come to an investor who wants to put their money in both funds, I think that will be the best choice. You can put your money on HMAX and UMAX, both of them, right? Because we know HMAX has got 2.5 points, where UMAX has got 3.5 points, and the winner is UMAX. So those are my conclusion. You can either invest in either of them, depends on your goal and your strategy, or you can divide your money between the two. So if you have $10,000, you can put in $5,000 on HMAX, and you can put $5,000 on UMAX, and so on. That's just my opinion. This is not financial advisor. This video is for educational purposes only and informational. So again, if it's your first time, just make sure you subscribe and like my content. And if you have any comment and any suggestion on my videos or any of these funds, just make sure you let us know. As community, we're working together here, guys. Thank you very much for watching, and till next video, bye bye.